Well, joining me now with more on this market is Chris Fasciano. He's a chief market strategist at Commonwealth. Chris, great to have you on the show this morning, joining us from Massachusetts. And what do you make of this market open?
So it's interesting, right? We've had a very strong market, as you mentioned. It's up almost 20% off the low. It's been up, I think, 16 of the last 19 days. And then over the weekend, we get the news of the Moody downgrade. And in isolation, I don't think that's a big deal for the market, but it does highlight one of the concerns I've had off this strong rally about where we go from here, and that is the future path of the market to me is one of timing, and are investors prepared to look through some bad news as they wait to get to the other side of the uncertainty on trade policy and tariffs? And I think this is kind of the first step to see how much bad news they're prepared to take.
What exactly do you mean by that?
Well, this fits together, right, is that we've had a big rally off of the better news on trade policy, and that makes a lot of sense because it's taken the tail risks on the economy off the table. But we've also seen a substantial deterioration in the soft economic data like consumer sentiment. But part of the rally was driven by the fact that the hard data around jobs and inflation has continued to improve. So the key is, does that hard data begin to weaken? We've already seen earnings estimates come down. And is the market prepared for some softness in economic data as they wait to see better news on trade policy that either continues to lower or eliminate tariffs going forward? And then where Moody's fits in is the timing's interesting because it comes at the time that the budget bill is being negotiated in Congress. And part of that is a big tax bill that I think the market's counting on for stimulus in the second half of the year or next year to offset some of the weakness from the tariffs. And now we have to watch very carefully whether this has any impact on those negotiations that are going on in the House.
What could be a potential impact as those negotiations continue? Of course, with Congress noting that they do want to have the bill to President Trump's desk by Memorial Day.
Yeah, it does feel like at this point they're too far down the track to make a lot of changes, but it's also not clear yet that they have a bill that they can get the votes for. So you could see some tweaking of the tax bill or more spending cuts to try to address the deficit, right? The deficit's not a secret. We've known it's an issue for some time. And Moody's is actually the third rating agency to downgrade the U.S. debt. First one was in 2011. So it's a question of when the market begins to focus on that as an issue, and does it impact Congress's thinking?
Yeah. So with that in mind, Chris, how are you recommending that your clients adjust their portfolios in this environment?
Yeah, so I believe timing markets is hard. It's probably impossible. So our advice all year has been this would be a year that was different than the other two, where we saw market returns dominated by a small group of stocks, the Mag 7, large cap growth, tech. We have felt for much of this year that it would be a year where diversification would be the best way to position portfolios. And we haven't really changed that. We've seen international stocks outperform. We've seen segments of the market outperform, like financials and industrials have acted well. So we continue to believe, rather than making big bets in any one direction, that you continue to have balance and diversification within your portfolios across geographies, styles, asset classes. And that's been the best way to navigate the headwinds that we've seen so far this year. And we think it will continue to be the best way to navigate headwinds in the back half of the year as well.
Chris Fasciano, he's a chief market strategist at Commonwealth, joining us from Massachusetts this morning. Chris, thank you so much.
Thank you.